Hello and welcome to Last Week in Finance. Today is October 4th of 2020. Let's get to the numbers. The S&P 500 went up this week 1.5%. Actually, it ended a losing streak of 3 negative weeks in a row. Gold went also up this week 2%. Right now, the ounce of gold is around $1,900. Silver also went up, it has a lag effect against gold and went up 3.74%. Right now, the ounce of silver is $23.74. The US dollar index, the DXY, went down this week 0.88%. And Bitcoin is slightly up right now. Bitcoin is $10,000 and $500. Okay, let's start with the unemployment report in the US. The official unemployment rate went down. Right now is at 7.9%. Okay, this information we have to take it with a grain of salt. The official unemployment rate is a little bit manipulated. This is the U3 unemployment rate. The U6 unemployment rate, which is a more realistic measurement of the unemployment situation, is right now at 12.8%. Remember, around 700,000 people just stopped looking for a job in the US. The labor force, the labor force in the US shrinked by 4.4 million people. Right now, the labor force in the US is around 160 million people. It shrunk against, pre-pandemic measurements. Also, Disney this week laid off 28,000 employees. Around 67% of those employees were part-time or low-wage jobs. Of course, this week we have to talk about the debate. The debate was atrocious. As we expected, Trump went with everything in that debate, and Biden didn't look so bad. I mean, for the standpoint that he was feisty, combative. By my standards, if you ask my opinion, it was a tie. Although the good thing is, doesn't matter if the next president will be Democrat or Republican. The the trend will continue. The Federal Reserve already said that they're gonna keep printing money. They're gonna keep very low interest rates, artificially low interest rates, and that's what's most important. Now, all these numbers are very skewed, very shaded. This is worldwide, not just in the US. Of course, of course, with this pandemic, with this economic crisis due to the pandemic, there will be a lot of permanent job losses. Will be a lot of default in credits. Many credits, and I'm talking about personal, real estate, commercial, even governmental credits, governmental debt won't be served. And that will create an even further crisis. So it's going to take a few years worldwide to really recover from this. But what we need is reality. We need sanity. We need exactly the information of what is really going on in order to recover every economy to recover to previous levels and even higher. I mean, I'm not a pessimist. I know in the long run it will be a lot of creativity, a lot of entrepreneurship, a lot of hard work, will be a lot of good things that are gonna come up with this. But we need reality of what's going on, and just printing money and expanding the central bank's balance sheet is not gonna do it. Okay, and about inflation, Every, many people is speculating with high inflation, even hyperinflation, which I don't see it happening because in order to get inflation, we need way a lot of monetary mass in the economy. And what I believe is going to happen is that okay, the essential goods, yeah, they may suffer inflation, and this inflation is not going to affect every item of the goods and service that we consume every day. The essential goods are going to go high. Real estate, unlike the 2008 financial crisis, it's not going to go way down. I mean, it depends in the regional, the local markets in all around the world. What I'm seeing right now is that it's gonna suffer the most is the high-end residential real estate in many of these, a lot of overpriced markets like New York, San Francisco, also in Europe like Barcelona, Madrid, and places like that. Places that were overpriced anyway. And but the biggest hit we're gonna see it in commercial real estate. Before the pandemic, it was getting obsolete. We are moving more towards e-commerce related businesses and less to physical stores. So right now with COVID, also with work from home and telecommuting, uh, we're gonna see these commercial offices, real estate is gonna decline in price, decline in demand. The trend that I'm seeing right now is that the suburbs, the biggest house away from the cities, are actually gonna take off. They're hiking in price, and it's a very strange real estate market, at least in the United States. But right now, what that was the title last week. We need sanity, we need patience, and we need to see the real numbers. We have to wait to see the real numbers. And I know this is not, a special combative episode, but that's what uh that's what I recommend. Just patience in order to get the real information of the long-term effects of this crisis. So that will be all for this week. I hope you have a nice day, you have a very successful week, and see you next week. Bye bye. Take care.